Hi everyone, my name is Tom. I work with Augur. Happened to be in Amsterdam today, so it worked out quite conveniently. I'm off to London next week for some of the the ENS workshop stuff. So, but today I'm going to give just like a very brief overview of what is Augur, kind of our new tentative release schedule, and then kind of some pros and cons of what we've learned along the way in terms of building on Ethereum once we're approaching release here. So, yeah, Augur release schedule, Ethereum, some questions. So let's start. Augur is a decentralized prediction market platform. It's not a prediction market itself. Augur is software that allows users anywhere in the world with no restrictions to come on and create a trading market on the outcome of any future event. There's no central authority, there's no limits, there's no regulation, there's no rules. It's in the same way Bitcoin is. So, we have centralized prediction markets today, such as Betfair and Predictit, where, they'll limit your bet to $900. The amount of markets that you can trade on is limited and regulated by whatever jurisdiction it lives within. So there's not really a free way for anybody to go and create a market about whatever you want and allow users and other participants to trade on it. And with this, you can quite literally almost predict the future in the sense that we use, with traditional prediction markets today, whatever price the share is selling at, is a rough indicator of how likely the crowd believes that this event will occur. So if you buy a share of Donald Trump winning the presidential election at 60 cents and he ends up winning the presidential election, you'll be paid out $1 and all the losing shares will be paid out $0. So that's kind of just brief how trading works in a prediction market at least. But with Augur, Augur is essentially two products. It's essentially a decentralized trading engine, and then it's or a distributed oracle system. The trading part isn't necessarily new or novel. We have this. We have like Ether Delta and Oasis DEX, and a bunch of other prediction markets are working on the trading part as well. The kind of newer part that Augur is working on is the oracle system. It's how do we feed all of this randomness and information into the world into one concrete, concise, definitive answer on did something happen, and feed that into the Augur system or a blockchain or whatnot, and how do we use that data. So that's what sets us apart from more or less. There's a bunch of prediction markets coming up today. There's one actually right now. I believe they have 25 million already. The Stox one. So that's about to sell out. But between Gnosis, Augur, Delphi, Stox, all these ones you see today, essentially the one key difference is that we're attempting to build a distributed oracle system as well. While all these other platforms are their prediction market trading platform, and they plan to plug in with different oracle systems, and they have certain backstops to prevent those, hopefully prevent those oracle systems from failing or colluding. But that's essentially what keeps it different. And we have a token as well. It's called Rep. That's used for reporters in the system only, which I'll get into very quickly. But everything, all the trades done on Augur are settled in Ether. You don't need our token to use Augur or trade on Augur, and the vast majority of users who probably use Augur will never even know that our token exists. So trading, as we said, Ether is used as the settlement currency. We don't force you to purchase into a proprietary cryptocurrency in order to use our platform. All winning shares pay out $1. There's no maker-taker fees, which is quite interesting, in comparison to some of the normal order books you're used to. Everything's done on settlement. So once you actually settle your position out, whether that is you wait for the market to resolve, or you end up getting both sides of the outcomes and you can sell a complete set, you will be charged a small fee at that point there. But actually putting orders on the book and taking them off the book, there's no fees. And as of right now, all trades are done on chain. Everything is stored in Ethereum smart contracts. We essentially have, we have the contracts, and then we have a reference client that we built that allows you to interact with the contracts. But you can interact with them however you please as well. Creating markets. So instead of just trading, what Augur also allows anybody to do is come onto Augur and create a market on whatever they like. The first release of Augur will include binary, multiple choice, and scalar markets. Binary being an example of a yes or no type question, multiple choice, who won the horse race out of an option of 3 or 4, and scalar, a numerical range, like, what price did Apple close at below or, above $150 or whatnot. Market creators set that settlement fee we were talking about before, and they actually get 50% of that. So that's how you're incentivized to create a good market. Market creators have to put up a small bond. It's going to depend on how many markets are created, but imagine, somewhere $50, $100 where it's not, non-trivial, and that incentivizes you to create a good market. Now, all the volume that goes through your market, once that actually settles, you're going to receive 50% of those trading fees. Augur itself doesn't make any money. The platform doesn't make any money. All the fees that are generated go directly to the person who created the market and the reporters that helped resolve that market. So you're incentivized to create a high quality market because that would, in theory, attract more liquidity and make you more money at the end of the day. Reporting. So this is like the distributed consensus system. Once every 2 months, rep holders are going to be asked to log into Augur and report on the outcome of events. It's not mandatory. If you hold rep, you're not penalized for not doing this. So if you just hold it on like Poloniex or a wallet and you decide not to participate in Augur, you will not be penalized for doing that by any way. But the more rep you own, the more fees you will receive. So you need to come into Augur once every 2 months, and we're going to give you a essentially random distribution of, say, 20 questions. We tell you 6 or 7 of these are mandatory. You use either the resolution source that they point there, or you find your answer however you please. But you answer right, you're going to get your proportional share of the other 50% of the market fees for that market. And essentially what we do is we have all these people that have to purchase rep. They have to put their own money at stake, and they stake that rep on their answers. And if you answer incorrectly or you don't answer within the consensus of the rest of reporters, a portion of your rep will be distributed to the people who do answer correctly. So, and when you do answer correctly, you will be paid a portion of the market, the settlement fees, as well as you may get some of the rep from the people who answer incorrectly. So it's this system where we force people to essentially stake some money, put your money where your mouth is here, and you have to come in and this is how we resolve the markets in a distributed, consensus type manner. We don't rely on Oracleize it or reality keys or, one central entity to resolve the markets.
What kind of questions?
What's up?
What kind of questions?
It can.
Do you have to be
So
Elon Musk or?
No. So it's anything that has a clear, definitive outcome. From it has to. It can't be a question like, was my dog happy today? Because that would be marked as invalid by reporters. But is it going to be raining at 12:05 p.m. in Amsterdam according to Weather Underground on July 21st or whatnot? It has to be very specific, very definitive. That has a very clear outcome. Because ideally, you want all of these reporters to come to generally the same answer. But it can literally be anything as long as there's a very clear point on when it did and did not happen. So that's essentially the 2 big pieces of Augur. It's people who can trade and create markets, and then people who can help resolve those markets and be rewarded for doing so. So as of right now, Augur's in a public beta. It's live at app.augur.net. You can see it. It has our old reference client up on it right now. But essentially, we're looking for end of summer, sometime by the end of this year. We had a little bit of speed bump. I don't know if anybody saw in the past week or so. We'll go into it when we talk about Ethereum. But we actually had to migrate our token contract. We got the Serpent. Augur was written in Serpent. We got the Serpent compiler audited, and there ended up being a bunch of mistakes and bad things in there, which caused an exploit in the rep contract. It allowed us to actually change the creation timestamp and freeze all tokens indefinitely. So we exploited that ourselves last week. We froze the token for 31 billion years and issued out a new token to everybody. So we're in the process now. We have we're going to do about 4 weeks of transitioning most of our Serpent code to Solidity. It's kind of been general practice. There was a CoinDesk article today about how Serpent is kind of being put to rest. If you're doing any smart contract development, it should probably be on Solidity or Viper. But the first release, it'll look good. We have a new client just designed by IDEO. It'll be out in a month or 2, so it'll look good, it'll work. But realistically with Ethereum, where it is right now, it's going to be a little bit slow and expensive. It's not going to be the grand vision everyone kind of thought a year or 2 ago. It will be cheaper than predicted or Betfair. It will have less limits than predicted in Betfair, and it will let anybody trade on any sort of market here. But 15-second trade times and 15 cents, 20 cents to process a transaction isn't a necessarily ideal world, but that's kind of what we're working with Ethereum today. our second kind of iteration of release is going to be when some on-chain or off-chain trading solution comes to market. Ideally, we're looking at 0x. That's just going to allow users to create, cancel, modify, change orders significantly quicker. You don't have to wait for block times. You don't have to wait for block confirmations. Ideally, we'll plug into something like a 0x protocol and make a lot of the internal transactions significantly quicker, which will hopefully make the UX a lot better as well. After that, the next thing that Augur really needs to be successful is essentially a stable coin. We all kind of need this in one way or another. You don't want to place a bet in Ether, end up winning that bet, Ether tanks, and you end up losing money because you had your value locked up for 2 months or whatnot in a prediction market. So ideally we need a stable coin of some sort. We're looking at MakerDAO as kind of the one leading the way. We'll see when that comes out and whatnot. Alternatively, you could create like a contract for difference on Augur against the price of Ether in like the opposite way in which you're betting as well, which is something we might be able to do. But essentially, we need a way to have people to be able to settle their bets in a stable currency instead of a volatile currency like Ether. And that will be kind of the third V release. And final kind of grand vision here is, it comes a lot with Ethereum scalability, but when we have something like sharding or RAID and off-chain state channels where people can trade significantly quicker, really no block times, really no fees. This is kind of way down the line, and this is very dependent on Ethereum protocol development. But now we can do tons of transactions per second, significantly quicker and significantly cheaper than we could before. That's kind of our 4-step plan. Realistically, we'll see V1 sometime by the end of the year here, and anybody can go on and trade. Just very quickly, some of the advantages of Ethereum that we learned. We're able to move on it very quickly, which has been very nice. However, we just kind of got rid of Serpent, but with having a foundation kind of around the Ethereum, some people will say that's the Achilles heel of it, that it shouldn't have centralization, it shouldn't have governance, kind of like Bitcoin. From a project's perspective, it's actually quite beneficial to have that. When we need something like edited or updated in the Serpent compiler or anything, we can essentially kind of just ping Vitalik on Skype, and if he has the time to do it, he'll get it done in an hour or two. Can't really say the same with Bitcoin at this point in time. So while that might be again the Achilles heel, that there is some sort of governance around here that makes protocol changes and decisions, it can actually be quite beneficial for when you're building on top of that protocol that's very new. Right now it does more than Bitcoin. We tried building Augur as a fork of Bitcoin initially, spent 2 or 3 months on it, and it just became abundantly clear that Ethereum was going to allow us to develop this significantly quicker than as a fork of Bitcoin. Now, some of the disadvantages of Ethereum, besides what I just talked about with having to merge all of our contracts off of Serpent, going to a Solidity, limitations of dApps. Everyone's starting to kind of realize this once you start getting your application and getting it ready to ship it to people. You start realizing stuff like we want users to be able to favorite markets within Augur, but then where do you store that favorite? So if you store it locally, it's not persistent between different devices. So you go to a different browser and you don't have your favorites. Or we can store it on chain, but then that costs 7 cents. And do we want to be charging users to store a favorite, within their account here? So, with Ethereum, it's just user experience is really hard. No one's really solved it yet. From how to store stuff, from different accounts, lose your private key, you lose all your money. From just, Augur is going to have 6 or 7 different ways you can log in. From a private key to a ledger to a Trezor to MetaMask to Uport. It's UX isn't really nailed or done there yet, and it's becoming quite clear. It's difficult to communicate that when you're actually trying to ship a production decentralized application here. And as we talked about before, scalability, that's going to be a problem. Just we're working on it. We have solutions in the pipeline and whatnot. But as of right now, we all know how fast Ethereum is. We all know what it can handle, and it's going to need to significantly increase if we ever want to see really fast production dApps doing real volume on this chain. That's kind of a quick overview. Anyone have any questions?
Good evening.
Good evening.
My question is, have you heard about Slacker? They were on last conference here, and they really caught my eye. That it's basically a smart contract production app. which I think could really fit with your model of making bets and making sure they go through and making sure everything is fine and smooth and user experience is
No, I haven't heard. What's the name?
a slacker.
Slacker. No, I haven't. I can look it up
Yeah,
afterwards.
you should talk to Rich.
Sweet.
There we go. Hook
Thank
you
you.
up. Slack. The guys that were last conference. Slacker. I'll hook you up, man. Don't worry
Okay.
about
Yeah.
it.
Well, it comes after. Nothing else?
I can ask a question. Why would consensus mean true? Because, well, betting on sports is quite popular, but there's also one party that decides what the score was. And now we're dividing it, asking others to comment on what would the score be. So, for instance, if the ball was just on the line or over the line, maybe the majority will say, no, we're now inventing new rules for soccer. Wouldn't it be an idea to turn it around and have the bettors decide which party would be the one giving the final vote?
So that's, as far as I recall, that's kind of the approach that Gnosis takes in some way of the event resolution there. We believe we have separated the trading, the bettors from the reporters. We believe those should be two independent things if you want true distributed consensus. We don't believe that people who are, that the biggest bettor in the market should be the one who decides where the resolution comes from, as just kind of a theory problem of possible collusion there. So essentially, we do this distributed model. If it resolves incorrectly, if people try to invent new rules and you happen to collude and you get an answer to resolve a way that maybe actually didn't happen, in Augur you can actually bond the outcome 3 times. So if you go into Augur and you believe that a market has resolved incorrectly, I can put up a bond that sends it back to reporting, and if it ends up resolving the other way, I make money. If not, I lose my money. And then if it happens to resolve incorrectly 3 times, one of the nice things about having a token is that then we can fork the token. We don't have to fork Ethereum, but then we can fork rep. There'll be 2 instances of rep, one that says Donald Trump won, one that says Donald Trump lost, and ideally the markets are going to trade on the one that reflects whatever happened in the real world. Yeah.
And the 2 months, that's the time we'd have to wait to get our money, right?
So not necessarily. So that might be closed a little bit before release as well. But alternatively, what you can do, that's how long it takes to resolve through distributed consensus. We also have automated market closing in the same way that Gnosis and all these other places do that with like a centralized Oracle. The idea is that though the market creator can say take an outcome from Oracleize it, and if it happens to be incorrect, I can bond it and send it to distributed consensus, which is not something that the other prediction markets have. So most of the markets will probably fast resolve with the threat of if you do this incorrectly, it's going to go to the reporters and you're going to lose your money. Slash, you can also just exit your position early. So in theory, once the outcome is known, you should be able to sell your shares for 98 cents on the market to some arbitrager who's willing to sit for 2 months and make the 2 pennies. So there's a couple ways to exit your position early. Cool.
Okay.
One more.
Oh.
Who would be the end user? Would it just be us or small companies?
Realistically, in the the future after an initial launch here, I mean our user base is going to be essentially crypto traders. Realistically with the technology of where it is today, it's going to be crypto traders. There's hopefully we get to kind of expand into the more betting and overall trading market, but that's just kind of a limitation of how quickly can we get people into this kind of new crypto system here. You have to buy Ether, you have to kind of be in a new ecosystem. So we wholeheartedly expect our first core user base is just going to be these couple thousand crypto people who've followed our projects for the past couple of years.
Thank you very much.
Thank you.